operational procedures and adequate controls are in place to reduce the risk and exposure of the group. Mr. Bennett has over 20 years experience working in the financial services sector, with 12 years spent at the Trinidad and Tobago Stock Exchange, working up to the ranks in the operations department to the position of assistant operations manager. At the time of his departure, in addition to operations, John has also experience in market compliance, investor education, and business development. Mr. Bennett graduated from the University of the West Indies with a BSc in economics and holds an international MBA with a specialization in finance from the Arthur Lock Jack Graduate School of Business. Mr. Bennett has pursued postgraduate studies in the areas of international finance, operations management, business analytics, and data science. Welcome, Mr. Bennett, to this panel. And lastly, we have Ms. Aluja Faisal. Ms. Faisal is a financial services professional with over 30 years experience in the financial services sector in the ECSE, with more than 15 years in financial regulation and supervision. Ms. Faisal is an experienced commercial banker, bank examiner, and securities regulator. Ms. Faisal holds a Bachelor of Science from the University of Durham in the United Kingdom and a Bachelor of Law, LLB, from the University of London. She is a certified anti-money laundering specialist and a member of the Association of Certified Anti-Money Laundering Specialists, ACAMS. Ms. Faisal is currently employed as the CEO of the Eastern Caribbean Securities Regulatory Commission and is responsible for the day-to-day management of the operations of the ECSRC. Welcome, Ms. Faisal. And this is our very insightful panel this evening. And in today's session, now that I have announced the panel, we'll go into the topics that we are discussing today. And the topic for today is investing, saving to invest. So, to set the stage, let's briefly distinguish the differences between saving and investing. Saving is the foundation for financial security. It's about setting aside a portion of your income for short-term investment goals, emergency funds, and short-term planning expenses. Savings are typically held in safe, accessible accounts that prioritize liquidity and stability, offering a steady, thorough, modest return. Savings is essentially for keeping us secure in the present and prepared bonds and mutual funds, and even ETFs, to achieving long-term gains. Unlike savings, which provide low risk but also low return, investing involves calculated risk with potentials for higher returns. However, there are risks associated with investing. Now, this is to be mindful of. Any questions that you have, you can place it in the Q&A chat. And one thing that I want to just highlight here today, well, this month, we are celebrating the 23 years of the Eastern Caribbean securities market. And hence the reason why we are trying to put on these panel discussions to sensitize the public on what's being offered in the ECSE and how you can access these offerings. So without further ado, I'll begin by first speaking with our regulator, Ms. Faisal. Ms. Faisal, can you hear me?
Cedric, good evening, everybody.
Ms. Faisal?
Good evening. Can you hear me?
For some reason, we are unable to get Ms. Faisal, so I will move on to Ms. Francis. Ms. Francis, can you tell us why you need to separate savings from investing?
Thank you, Cedric. As you stated, there is a very important difference between saving and investing, and that is the element of risk that is involved with investment product, which is not non-existent with savings, but it is pretty low when compared to investing. With savings, you are simply placing money, putting money aside essentially for whenever you need those funds, for emergencies, for your short-term goals, and so on. But with investing, you are actually placing those funds into an investment vehicle that you hope will allow you to reap greater rewards, or rewards greater than that which you'd receive from simply putting your funds on a bank account or a credit union account or so. It's extremely important. Yes, savings allows you, by saving it allows you to be a bit more flexible. You're able to take advantage of opportunities that just come up quickly. But with investing, you're able to plan for your long-term financial success. So it's very important. They are both important, but investing is extremely important. And we think that each individual should at least try at some point to focus on investing.
Okay, now with that being said, and now that you've raised this, and I will now segue the question to Mr. Jha, who's also heading brokerage at BOSL. Mr. Jha, we saw that Kisel articulated the distinction between saving and investing, and you are in the brokerage space. So can you just give us some insights into how you go about seeking these investment vehicles? You're on mute.
Okay, and it's very important, and let's not underestimate the importance of it, is that before you start investing, or when you decide to start to invest, you go to a licensed intermediary, an intermediary licensed by the Eastern Caribbean Securities Commission. We've seen, and I suppose when Miss Faisal comes on board, she will speak a little about the regulations and so forth. But we see some, I won't want to call them fly by night, but we have to be mindful of non-licensed persons promoting securities in the market. So that's why it's important, and this is so to protect you, the investors, that someone will not come and just take your monies and go with it, and be able to give you proper advice. We, the brokers, are properly trained not just to get you returns, but also to protect you as our clients. So it's important that you, before you start investing, go to a licensed broker. And we have 6 licensed brokers scattered in the ECCU, and all of us will be available to assist you.
Thank you for that, Mr. Jha. So as you mentioned, licensed brokers, I'm going to segue back to Ms. Faisal, who is the CEO of the Eastern Caribbean Securities and Regulatory Commission. So, Ms. Faisal, with what we just heard from Mr. Jha, could you just give us insights into the role of the regulator in the Eastern Caribbean securities market?
Yes, good evening again, and thank you for your question. And I must say that the ECSRC is extremely pleased to be part of this esteemed panel. The Eastern Caribbean Securities Regulatory Commission, ECSRC for short, was established at the start of the Eastern Caribbean securities market in 2001. And its role primarily is to regulate and supervise the Eastern Caribbean securities market. And what does that mean? So essentially, the Eastern Caribbean Securities Regulatory Commission licenses participants, persons and entities who are desirous of doing business on the Eastern Caribbean securities market. And Mr. Jean, as well as Ms. Francis, would have alluded to the fact that they are licensed brokers and they are licensed by the Eastern Caribbean Securities Regulatory Commission. Apart from simply licensing, we also ensure that the securities regulations or the securities laws that govern the operations of the securities market are followed, are adhered to, and where there are breaches of those securities laws, the Commission steps in and takes action to redress and address these situations. So just to give some background, the Eastern Caribbean securities market is governed by uniform legislation that has been enacted in all the ECCU member countries. So the ECSRC was established under an agreement by the member governments of the Eastern Caribbean Currency Union, and these member governments are the 8 countries, Anguilla, Antigua and Barbuda, Dominica, Grenada, Montserrat, St. Kitts and Nevis, St. Lucia, and St. Vincent and the Grenadines. And so the ECSRC, as a regional regulator, once we have licensed an individual or a company to operate within the EC, these individuals or companies can interact with persons or provide services to persons who are residents in any of the 8 member countries. Apart from licensing and ensuring that the laws are adhered to, we also issue market guidelines, we issue market notices, and quite recently we would have issued a market or warning notice to the market because there was an entity that was unlicensed or is unlicensed that was seeking to provide services in the jurisdiction. So we also have a surveillance role. We look over or surveil the market to make sure that there aren't any bad actors and persons who are operating within the requirements of the law.
So great, thanks for that. And you provided a lot of clarity here, Ms. Hisal, on the protections. And so I'll still go back to another question before I move on to the exchange. We've been noticing a lot of digital platforms, and you just mentioned one earlier, and cryptocurrencies have entered the space. How has regulation done as it relates to these digital and platforms and other investing platforms that are out there, along with the entrance of cryptocurrency? What regulations are you working on, or the regulators have put in place to address that?
Excellent question. The ECSRC, along with the other regional financial regulators, including the ECCB, have developed a legislation to govern the activities or virtual asset business in the region. That legislation has been passed in most of the ECCU member countries, and we are now in the process of developing the regulations and a supervisory framework that will provide the guidelines or the approach to that type of business in our jurisdiction. However, having said that, I think that it's important for persons to know that there is, as you would have indicated, Kishel would have indicated, and Lawrence would have indicated, that there is risk in investing. And even though the legislation has been drafted, it's not yet operational. Persons need to be very cautious and mindful. We know that things are new and they look shiny, but we should still be very cautious, and we urge caution when persons are or do decide to look at, I wouldn't say invest, but look at cryptocurrencies. We would encourage persons to look to their brokers to see what is available on the market before they turn to any sort of virtual asset or crypto asset business, because that is an area that is still, a lot of regulators still don't know how to approach the regulation of these types of entities and that type of assets. And so we encourage, or we urge, extreme caution, and in fact, if I may go as far as, urging persons not to, if they can at all, not to invest in these types of assets until they understand, and we can understand exactly, what the risks are, and basically, what their risk appetite is when it comes to these types of investments.
Thank you so much for that, Ms. Faisal. And so I will now move, as you mentioned, and you've now set the framework for regulation and protection. I will now take that discussion to the exchange. And Mr. Burnett, we, for the purposes of our attendees, could you tell us what is the role of the Securities Exchange in the ECCU?
Thanks, Sancho, for that question, and good evening, everyone. So the role of the exchange within the Eastern Caribbean is to facilitate the mobilization of capital for companies and governments. So we provide an avenue where governments and companies can sell their securities to the public to raise capital for various purposes, such as investing in new plant and equipment or expanding their operations. If you're a company, if you're a government, there may be certain capital projects that you want to undertake in your country, or any other purpose that you want to fund, any other capital project that you want to fund in your country. And at the exchange, we provide a marketplace, a regulated marketplace, where you are able to sell your securities to members of the public. From the public side, as an investor, you have the opportunity to invest in these companies, and if it's a company, you have an opportunity to purchase equity in these companies. For the government, you have an opportunity to purchase the debt securities that are sold by the government, essentially making your capital, your money available to them to fund whatever purposes that they would have outlined in their prospectus. So that's what we do for what we refer to the primary market, which is when the securities are now being issued. After the securities have been issued, we provide a secondary market where these securities that were issued can then be sold between investors. If you are lucky enough and you make the right investment decisions, you can experience some capital gains on your investment where you are able to sell your securities for more than you purchased them for, and you generate some returns that way. And depending on the security that you invest in, you also have the opportunity to benefit from dividends or interest payments on the securities that you own. So that's the main purpose of the exchange in the region, just bringing the companies or governments that require capital and the investors or members of the public that require investment opportunities, bringing them together in a regulated marketplace.
Right, great. That's fantastic, Mr. Burnett. So the marketplace now matches buyers and sellers, but I'm sure we have a number of attendees that don't even know how to access these markets. And from when a recent survey was done, and I believe when you looked at the citizens of the ECCU, I believe 1 in 8 actually access these markets. And you mentioned these are opportunities for wealth generation. So can you tell me how an individual can access the exchange?
So as a regulated marketplace, all the activity has to go through a licensed intermediary. We've heard that word a couple of times already for the panel discussion. So all of the activity goes through those licensed intermediaries. The 6 of them that we have operating across the Eastern Caribbean. So any investor, or any member of the public that is interested in making that investment in the market, whether it's in equity offered by companies or the debt securities offered by the government, they can contact those licensed intermediaries who will be able to provide them with investment advice to help them make that ultimate decision on which and what security they want to invest in. And then they would also outline the process for actually making that investment, opening an account for them, and then walking them through the process of providing the buy and the buy order to start off, and then the sell orders, and facilitating the settlement of those trades that the investor is able to execute.
Okay, thank you very much for that. Now I know our theme has been saving to investing, so I'm gonna move to our two brokers on the call. Mr. Burnett did indicate that in order for you to access these markets, you need to go through a licensed broker. So I will ask you the question, Mr. Jha. How when a client comes in and a client wants a specific investment instrument, how do you assess what instrument is right for that specific client?
Okay. First and foremost, you need to find out what's the client's investment objective. What are they investing for? What's the time horizon? But most importantly, what is the risk tolerance? And that knowing that risk tolerance together with the investment horizon will better inform us as to what type of securities to recommend to the clients. Some clients may just want some short-term securities. So we'll tell them what short-term securities are available, treasury bills, etc. Some persons may want to take the additional risk based on the risk tolerance, and that will probably recommend some mutual funds or equities for them. So it's all dependent on the client's objective. What are they investing for? Are they investing long-term? If they invest in long-term, we may recommend some bonds to them. So it's dependent on the client's understanding of their objectives, understanding of their risk tolerance, and then we'll be able to make a recommendation to that client.
Okay, thank you for that, Mr. Jha. And I'll keep the question with you. What type of investments are available right now on the ECSM?
Currently on the ECSM, you have equities. Some person call it stocks. You have bonds. You have treasury bills. And you have mutual funds. Let me just touch on each. Equities, as the name, equities, stocks is ownership in a company. So you invest in a company with the hope that the company is profitable, remains profitable, and you'll get dividends. Dividends is a piece of the profit that the company declares and pays you because you're a part owner. So if the company does make profits, you're entitled to some of that profit. So that is paid to you by way of dividends. However, you do invest in equities also with the view that the share price will increase over time, and that's what we call capital appreciation. So you may buy a security now at $5 and hope in the future that it increases over time. So if you sell it, then you will make your capital, you'll make capital gains. That's on the equities front. We also have treasury bills. Treasury bills is the various governments in the ECSE coming to you, asking you to loan them monies on a short-term basis, maximum 1 year, and they give you your interest. On the exchange right currently, it's sold by a discount. So you pay, say, for example, if a treasury bill is 1 year treasury bill is sold at a 5% discount. That means you're investing less now. You're investing $95 now, and at the end of the period you get 100. So that is the gain that you'll be making. Also, you have bonds. Bonds are long-term instruments where the government wants your money, but they want to hold it for a longer period, post 5 years. And what you should expect from the securities, you should expect interest, which is paid most likely in the region semi-annually, and and your principal at maturity. This is with a bullet payment bond. We also have mutual funds. It's not on the exchange, but it's available from the various brokers. And what a mutual fund is, it's a pooling of all our monies, and we entrust it to a investment manager, a fund manager, who will take these monies and invest it in different securities, different asset classes, different markets, with the view to increasing the value of your securities over time. And there are many benefits in investing in mutual funds. First, you may not have the expertise to choose securities. That may not be your forte. So you pay a professional in that field who will be able to pick assets and give you returns. Also, if a mutual fund, it gives you diversification. Every dollar that we invest in the mutual fund is spread among a number of various instruments. That's because our monies are pooled and invested in different securities. It gives you more options than you will be able to do on your own. Say you have $100 or say $200. You may not be able to buy, you may only be able to buy, say, 2 securities. However, your investment of $200 in a mutual fund, with all our monies pooled, you'll have the ability to have at least say 10 cents in every security. It depends on the amount of securities not in the portfolio. So that is one other advantage. It gives you diversification of the portfolio. Also, it gives you the liquidity in that if you want quick exit out of your position, if you want to sell your securities, the mutual fund affords you that opportunity. So you don't, unlike a bond where you may have difficulty selling on the secondary market and you may not want to hold it till maturity, a mutual fund affords you the opportunity for quick exit, entry and exit into the market. So in the market currently, we have equities as indicated, treasury bills, bonds, and mutual funds available to all members of the ECCU.
Okay, thank you very much for that, Mr. Joe. That was quite comprehensive. And I will remind attendees that you can post any questions that you may have for these panelists in the Q&A. So do not hesitate to do so. Now, with all investments, there's an element of risk, and I will take this question to you, Ms. Francis. What would you say to someone who is a traditional saver and normally saves on a savings account? What would you say to them if they are trying to take that plunge into investing, but they are concerned with the risks of investing? What would you say to them?
It's a very valid concern, first and foremost, for someone who has never invested before. And we expect that for an individual to have several questions. And those questions will be addressed with a simple conversation with your broker-dealer or whichever licensed agent represents that broker-dealer. Prior to or during the client onboarding process, your representative will explain to you the risk associated with investing. And as Lauren stated before, we're able to determine the type of investor you are and the tolerance that you have for risk, your risk appetite. Most cases, we have a questionnaire or a quiz, a tool that we use to help us to determine the category within which you fall. So we have individuals who are categorized as low-risk investors, then we have moderate risk and high-risk investors. Once we go through that initial conversation, we expect that you have questions at the end or have follow-up questions as well. And those will be things that we will be able to address. We also encourage our new investors or new clients to do their own research, because it is very important to also seek information about the instruments yourself. The information is available, and if you need help finding it, the broker-dealers are also there to guide you. So it is important that you seek the guidance of your licensed broker-dealer and the representatives therein, and also to make decisions that you are comfortable with, to have the information available, to have access to the information available, and to seek that information before you make those decisions.
Yeah, thank you so much for that, Ms. Francis. But as we are on the topic of a first-time saver, and typically we have individuals who have savings accounts because the market has traditionally known saving. How does a saver balance their savings and the savings balances with the investment balances? So in other words, how would a saver know how much they can invest in, and so that they can separate and state, okay, well, I need to hold this for savings and this for investing? How do you balance that?
Well, generally, within the financial space, we encourage the use of an emergency fund. And that would be approximately 6 months of your expenses that you would hold in savings. And theoretically, anything beyond that amount you can invest. For the new investors and those who are savers, they may or may not feel comfortable with 6 months, and they may decide to increase it to about 12 months. But it is very important, as we stated initially, to separate your savings from your investment funds. We wouldn't want to have a situation where you are using the funds that you absolutely need within a short term to invest, because when that happens, you may be forced to make irrational decisions. You may be forced to take losses, investment losses that you should not have had to take because you were trying to get out of the investment quickly, and you just needed the funds for a short-term purpose. So we encourage you to maintain an emergency fund of minimum 6 months of your expenses. Beyond that, we can look at the different options that are available. Lawrence spoke to the different types of investments that we have available on the market as well as within the region. And I'm pretty sure that once you've had that conversation, then you'll be able to select yourself which of the investments you want to get into. Theoretically, we know that equities are a bit higher risk than the debt instruments, but because of the higher risk associated with those shares or the equity, there is also the possibility of higher returns. So there's no maximum earnings with equity instruments, but with debt instruments, there is a maximum. Whatever was promised you is what you will receive, the maximum that you will receive. So the risk is a bit lower with the debt instruments, but with equity, the risk is a bit higher, but you are also compensated for that risk as well.
Thank you so much for that. Now, we have a number of questions in the Q&A chat, and we also have a number of questions via other platforms such as Facebook. So I will ask these questions now. And the first one, and that is targeted to the brokers. Someone has asked, I am from Antigua. How can I access a broker to start investing? And that's posed to you, Mr. Jha.
Yes, it doesn't matter where you are in the ECCU. You could contact any broker dealer. You could, for our details, you can go onto the ECSE website. It will give you our email addresses, our telephone numbers, and you're free to choose whichever broker dealer you want from Grenada up to St. Kitts. And doing business is very easy. Is everything. Most things are now done electronically, so it doesn't matter where you are. As long as you have access to the internet, you can do your brokerage business with any of the broker dealers.
Okay, thank you. And another question posed to the brokers, so I will have Ms. Francis answer that question. Also, do the brokers provide services to Jamaica and US investment markets?
Some of the broker dealers have access to those markets. So you just need to seek out the broker dealer and find out from them which of the markets they access.
Okay, thank you for that, Ms. Francis. Now, this question is posed, I would like to say it's posed to our regulator, and that's Ms. Visal. It's anonymous, so I'm just going to read the question. Does the ECCU frown on converting XCD to USD and investing in the US stock market?
Thank you. No, that's a very interesting question. No, we do not. But at the same time, we would prefer if our persons invest in our market. Why we have no in that market. The ECSRC does not have any. There's no legislation, in other words, that prevents persons from converting their savings and investing on the U.S. stock market.
Okay.
Actually, let me chime in.
Go ahead, Mr.
Yes,
Chair.
yes, but actually, as Kishel indicated, there are brokers who could give you access to the international market. However, one quick way that you could do so is by also investing in a mutual fund where most of the securities or a high percentage of the securities in that portfolio are international based securities. So there you get an easy access point to investing internationally without you doing so yourself.
Okay, thank you very much for that feedback, Mr. Chair. Mr. Burnett, I'm gonna pose this question to you. Are there any digital assets available that are through licensed organizations? If not, when will this be available?
That's a very timely question, Cedric, because we are currently working with a company out of Canada to establish our tokenized securities market, or a market for digital assets. And we hope to have this market launched by the end of this year. So when that is launched, investors in the region will have access to tokenized securities. And we'll just essentially be providing another asset class that would allow investors to diversify their portfolios and get access to new asset classes to add into their portfolio and generate additional returns, additional forms of returns for their investments.
Okay, thank you very much for that response, Mr. Bennett. So I'll ask this question to you, Mr. Shah. The question is, do you guys have index funds as well? So I am going to assume that the individual was asking whether or not we have index linked funds or funds linked to a specific exchange, whether it be the ECSE or the US stock exchange like the S&P or the NASDAQ. So that's the question.
Yes, currently there is no index linked security linked to the Eastern Caribbean Securities Exchange. But as indicated, if you so wish, by contacting some broker dealers do offer that service where you can get the securities.
Okay, thank you very much for that. Well, I'm going to pose this question to the entire panel because this one is a very interesting one. What would you say is the biggest mindset shift I would need to make if I want to transform from saving to investing? And I will ask every member on the panel that question because that's a very interesting question. So I'll pose the question first to you, Miss Faisal.
Yes, thank you, Cedric. From the regulator's standpoint, I would say that, well, persons need to be aware of the risk and be willing to take some risks, but calculated risk and risk that is within their ability to manage, right? I'm speaking from a regulatory standpoint. You should be I think for a lot of for many years we have in the EC, we are very risk averse, and I think for us to really have a market that works, we need to have persons who are willing to take some calculated risks, yes, but we provide the resources to be able to help them to do that, and through the licensed brokers who are able to give them investment advice, you know, they're able to make sound investment decisions and be able to make some good returns on their investments. We also need persons who are willing to trade, to buy and sell their securities based on the performance of those companies that they've invested in. What we see on our ECSE right now are companies that, the stock doesn't do anything. There's no trading from day to day. And so when persons understand how the market operates and if we compare that to how the markets in the US operate, where persons get information on a company releases its earnings, and immediately, based on the results, you see that there's movement in the stocks. So our hope and our wish is to see our market rise to that level of participation, where you have information being fed to the market, persons understand how that works, and you see them willing to buy and sell their securities based on what is happening with these companies and how, the results of their operations.
Thank you so much for that, Ms. Faisal. And Mr. Jha, I'm going to pose that question to you. What would you say is the biggest mindset shift I would need to make if I want to transition from saving to investing?
Okay, what you have to understand is that we all need to start having our monies work for us. Having our monies on a savings account will be quickly be eroded by inflation. I'm sure the inflation rate may be even more than what you'll put on a savings account. So how do you protect the value of your monies? And only one way you could do it is to outpace that inflationary rate. And one way you can do that is by investing. Investing simply is letting your monies work for you. So while you sleep, your money is working for you. So you have to change your mindset from savings, watching your bank balance and seeing a nice amount. That will be eroded by inflation. So based on what Kishel said, you have your 6 month or your 9 month money set aside for emergencies. Then start letting the monies work for you. Start investing, and that's the mindset you have to change. There are many sources. What is said? These days you cannot depend on just one source of income. So while you're working, getting your salary, your monies can be working as well to give you an additional source of income. That is why savings is important. Yeah?
Thank you for that, Mr. Jha. Ms. Francis, I'm going to pose the same question to you. We have a number of questions here in the chat, so I'm going to be quick with this one.
Okay, for the major mindset shift, I would say, is that for an investor, especially one who is just beginning and who's just starting their investing journey, it would require that you would be a bit more involved initially with the decision making. With a saving product or savings product, you essentially do very little. You choose an entity that you trust and you place your funds in that in an account there, and you just expect that every 3 months or every whatever period you'd receive your interest payments. With investing, yes, it is a form of earning passive income, but it also requires initially that you find the information that you need to find, become comfortable with the information, assess your own goals, assess your current state, and to make a decision at that point. Beyond that, once you become more comfortable with the markets and become more comfortable with the instruments, you can relax.
Okay.
as possible with an investment product. So it requires that you, if you need to make that shift, you need to be empowered and you need to do a bit of reading and conversations with your broker dealer.
Thank you so much, Ms. Francis. Lastly, Mr. Burnett.
So there's not much to add to what the other panelists have said in terms of the mindset change. But from our perspective at the exchange, we make ourselves available to assist the investors with understanding how the market works and understanding the risks that are involved with making those investment decisions. So for any investor or any potential investor that is with us this evening that requires any additional information, we have brochures available on our website that very clearly outline the investment process and provides all the information that you would need to understand how to go about making that first step into investing in the market and how to continue making those investments in the market. And if you have any additional information, you can always send us an email and we will be more than happy to answer your question and provide the additional information that you require.
Thank you very much, Mr. Burnett. While we on you, Mr. Burnett, I'll ask you a question posed in the chat. Are the investments limited to the Caribbean region, or are investments made worldwide or internationally?
Our market is not restricted to only persons that are resident within Eastern Caribbean. Investors can come from outside of Eastern Caribbean, are able to invest in our market, and a lot of them currently do. And our market is also not closed to issuers or companies from outside of the region as well. We are a very open market where companies from outside of the region can come in and offer their securities within our market. It's something that we would welcome because it will give us the opportunity to make more securities available to investors, give them more opportunities to invest in different types of securities and different asset classes.
Okay, thank you, Mr. Burnett. Mr. Jha, a question here posed in the chat. Does the mutual fund give investors access to the U.S. securities market?
Yes, it does, because that's mainly where the fund managers will invest the funds in U.S. securities, whether it be exchange-traded funds, whether it be equities, whether it be treasuries, U.S. treasuries, whether it be corporate bonds. That would form a large part of the portfolio in any mutual fund.
Okay, thank you very much. Ms. Francis, I am in St. Kitts, and what are the sign-up fees and what is the minimum amount on invest? Well, the minimum amount I can invest for someone with a low risk tolerance as a beginner. So this individual is in St. Kitts and they want to know what are the sign-up fees and what is the minimum amount that they can invest. And this is someone who has a very low risk tolerance.
Okay, so there are no sign-up fees with brokerage accounts. What we tend to have are transaction fees. So when you make a purchase, when there's a sale, then you pay a percentage of that, of the value of that trade to the exchange as well as to your broker dealer. So the fees vary a bit, and that's information that you can get from the broker dealer that you choose. And if you'd like, you can compare across the broker dealers as well. But they generally tend to be quite similar. So that information is accessible. With respect to the minimum investment, there's no true minimum investment on the exchange, well, for instruments on the exchange. Generally, for the equity instruments you're investing, once you can purchase 20 units of whatever instrument you want to purchase, whichever company shares you want to purchase. For debt instruments, however, there's a $5,000 minimum. But for, like I said before, if you are looking at shares, and if that is something that you want to get into, I know that you said that you are a low risk individual. But if that is something that you want to get into, then we're looking at as low as $30 for the 20 shares based on the value of the shares and the price of the shares at that time. But for lowest individual, as we stated before, we generally tend to look at the debt instruments. But you can have a conversation with your broker-dealer, assessments with your broker-dealer, and that will help you to determine whether or not those instruments would be best for you. So no true minimum.
Can I chime in, Cedric?
Yes, you can.
Actually, what's happening in this space now, and what you will hear a little more about is 5,000. However, various governments in the ECCU are looking at a retail product where they could come to the market and sell, and with minimum being as low as 500. So look out for that.
Okay, thank you, Mr. Joe. Mr. Burnett, this question is posed for you. Please provide info on the number of securities listed on the ECSE and on the RGSM.
So the question is the number of securities listed?
Yes.
Okay, so currently we have 13 companies with their securities listed on the market as in for equities. These companies are from a number of countries from the ECCU. We have from St. Kitts, Antigua, Grenada, companies that are conglomerates where they have a number of different different holding companies or operating companies under that company that is listed on the exchange. So that gives investors a fairly wide range of sectors that they can consider for the investment opportunities. With respect to government securities, we currently have about 178 government securities listed on our market, ranging from the treasury bills that we just mentioned earlier, treasury notes and government bonds. So that also provides a wide range of opportunities for investors to try and get into these securities, and we regularly have auctions of new securities coming in. So as security matures, to put themselves in a position to participate in the auction and to be able to be successful and acquire these securities on the primary market.
Thank you very much, Mr. Burnett. Now, this question is posed for the brokers. How would I know how much risk I can take if I have never invested before?
Well, your risk will be dependent on you. Takes a lot of things into consideration. Your investment horizon, because different if your investment horizon is longer, it affords you the ability to take more risk. If something happens, you would have enough, say you make a loss, you'll have enough time to recoup that loss the longer the investment horizon is. With regards to risk, how much risk you can take depends on your financial situation, how much monies you have set aside. You don't want to take risk that if your security goes bad, that you have nothing to live on. So it is all dependent on you, your personal circumstances. However, as Kishal indicated, we have different structured surveys that you could take that could help you determine what risk level you're at. And for example, some of the surveys will try to gauge your reaction to certain scenarios. If the market goes up, what happens? If your securities go down by 5%, what will you do? Will you buy more? Some persons might buy more. Some persons who are willing to take that risk will buy more if the market price decreases. Some persons may look to flee. So it's all dependent on you. And as we do have.
I think Lawrence covered it. The tool will definitely help you to determine, because sometimes you don't necessarily think about risk in the sense of financial securities. But like Lawrence stated, we have questions which, as he said, would say if something happens within the market and the value of your investment has fallen, what would you do? Would you immediately sell? Would you wait for a quarter? Would you wait for a year? So those questions would help you to see what type of investor you are. As he also stated, it's important to look at your time horizon. And that's why we encourage investors to start as early as you possibly can. For someone who is just starting out, 18 years old, they have forever, right? Right? So, but someone who is, let's say, nearing retirement or has already retired, you're looking at theoretically a shorter time span to invest. And it's a much riskier time because your earning years have basically been before you. Most of your earning years have been before you. So you cannot withstand as much risk as someone who is just starting to earn. So we encourage our prospective investors and our investors to get the information as early as you can and to invest. It will put you in a better position in the long run.
Thank you very much for that, Ms. Francis. We do have a couple Facebook questions that I'm going to go through now. The first question is, joining a credit union a form of investment? Any of the
It is. Because from my knowledge of credit unions, you do get return on your shares by buying at one price and selling at a higher price, or even make a loss. From what my knowledge, your share price remains the same at credit unions, but you do get an interest on it. So I guess it's an investment in its term as well. It is an investment, but it's a little different to what we regularly refer to as equities on the securities exchanges.
Okay, thank you for that, Mr. Ja. Ms. Faisal, this question, I believe, is a question posed for you. Can I trust the Unit Trust Corporation? That question was posed in the Facebook chat.
The Unit Trust Corporation?
That is the question, yes.
Right. So as far as I'm aware, the Unit Trust Corporation is not licensed to operate in the EC. What we have here, what we have licensed is a company that is registered in one of our member countries. I think that's what the person is referring to. That is owned partly owned by Trinidad entities. So as it relates to that company that we've licensed to operate in the EC as a collective investment scheme, the Commission would have gone through the application process and ensured that that entity has met the legislative requirements. We have, and now that it is licensed, it is subject to the necessary regulation and supervision that the ECSRC subjects all licensees to. So I'm not aware that the Unit Trust Corporation is operating in the EC, but I can say that we have a license, an entity that is associated with it. But that entity is a locally registered company that is licensed by the Commission, and it is subject to our licensing and regulatory regime. As it relates to investing in that company, that is not my place to say whether it is a good investment or not. That is a decision that each investor would have to make in collaboration or in consultation with their licensed broker, because that entity, its shares are sold through a licensed broker, and also their own investment advisors.
Okay, thank you very much for that, Ms. Faisal. Another question posted in the Facebook chat: what are some factors that make the equities increase or decrease in value? Mr. Jobs?
Yes. Profitability, a company's profitability will increase the value of the securities, because as a company, if a company is more profitable, it will be able to give you more dividends. So that means you get more returns on that security. So you should see an increase in the price of that security, because there'll be more demand for that security. And as demand increases in that security, we should see an appreciation in the price. A number of things could affect stock market prices. Economic factors, inflation, anything that affects the macroeconomy will affect a stock price, as well as things that affect the industry that the company is in. If your company sells oil, for instance, and the price of oil goes down, your share price will increase. So a number of different things affect stock prices, upwards or downwards.
Okay, thanks for that, Mr. Jha. There's another question posed, and I think the individual is asking about interest rates, and the question goes: if you have to provide an interest rate value percentage for the mutual fund, right, similar to a savings or fixed deposit, what would that historic annual rate be for that mutual fund?
For which mutual fund? It depends on there are many mutual funds. Two of them regionally in the ECCU, but also internationally, there are a number of mutual funds. So which mutual fund is a person asking about?
Right. So what I will do here is pose the question differently, and I hope I'm doing justice to this question. I believe what the attendee is asking is, if I were to invest in a mutual fund, historically, and you're right, there are many different mutual funds, many different classes. I think the customer wants to understand the distinction between interest and yield as it relates to these investment vehicles.
Interest. Well, there are different types of securities. Some securities pay you an interest, such as bonds, treasury bills. These are called fixed income securities. There are also other securities don't pay interest; they pay dividends, and such as equities, mutual funds, and what you'll see they pay dividends, but you'll also see a value increase or value decrease in the unit called the net asset value of that bond. So it's different to what's called interest. Interest is exclusive to fixed income instruments, while the yields or I won't call it yield, the returns on a mutual fund is calculated differently. Anything that affects the fund, the price of the securities in the fund, if the fund pays dividends, anything that affects the value of the security in that mutual fund will affect the price of that mutual fund.
Okay, thank you very much for that. Mr. Burnett, this question is posed for you. I just checked the site and most of the shares didn't move or barely move. So how would I be able to buy or sell and profit if the values basically stays the same on a daily basis? Mr. Burnett?
I'm happy that the investor went on to check this out. That's the being proactive. But that's one of the challenges that we have in our region, and Ms. Rizal alluded to that in some of her earlier comments. And that's also one of the reasons why we are doing sessions like these regularly, because we do acknowledge that in order for us to grow the market and to have greater trading activity and to see greater price movements on our market, we need to get more investors in the market. We need to get more companies listed on the market so that there will be more securities available for trading. So this is a long-term, medium to long-term project that we are embarking on to get more companies listed on our market. And once we are able to do that, then we'll begin to see trading activity on a daily basis, price movements on a daily basis, which would result in opportunities for investors to experience the capital appreciation, where they can buy securities low, sell them high, and grow their investment portfolios.
Cedric, can I chime in as well?
Yes, you can. Go ahead.
Quite apart from the increase in securities, the increase in issuers on the market, I think there's a need for education, and this is part of what's happening. And I'm happy to see this is taking place to commemorate the Financial Information Month. I think we need to have these programs even more, and even locally in our various jurisdictions, have more educational programs, because as you educate persons, you'll find persons come to the market more and invest more, and then you will see the price of the securities. Then you will see trading happening in these securities. So it's all about education, and I'm happy that the ECSE, for those of you who don't know, the ECSE has a program where it has actually gone into the schools where there are school competitions for trading on the exchange, etc. So that's at the school level. But I think we brokers and the ECSE and all financial institutions need to do more to promote investments in the region, and only then you will see the stock market working as we need it to.
Okay, thank you for that, Mr. Je and Mr. Burnett. Ms. Francis or Ms. Faisal, would you like to chime in on this question? Because the other question that I have is one that is a comment, and it's similar to what was just shared. Any comments from you, Ms. Francis or Ms. Faisal?
Yes, thank you, Cedric. Sorry, Kisha.
Sure.
Yes, I just wanted to say that, I think investors or shareholders, it speaks to them understanding their role. I know in our jurisdiction, persons look forward to getting dividends, right? You buy a share because you want to get your dividends. Yes, that's all well and good. But there are other aspects of being a shareholder, and what we have in the regulations, in the law, is for those companies to provide periodic information on an annual or quarterly basis, or as changes occur in their companies, so that they keep shareholders who are their part owners aware of what is taking place in that company. And if shareholders understand their role and they know what is happening, and they may decide to take a decision and say, okay, well, I don't like what's happening with this company. It's not, aligning with my risk appetite. And if I so desire, I may decide, okay, if there's a willing buyer, I will sell and buy something else, right? That is the whole point of being a shareholder, being aware of what is happening, being part of the decision-making process, attending the AGMs, and voting on those types of decisions, being part of that. So I just wanted to add that in.
Ms. Francis, would you want to chime in now?
Sure. I believe that the buy and hold culture is the main reason for the low activity. So we have, as Ms. Faisal just said, sometimes it's difficult for an investor who is comfortable and pretty happy with the returns that he or she is receiving and the growth that the security is experiencing. It's pretty difficult to have them give that up or give up some of it and to look at another investment vehicle. So yes, we have a pretty strong buy and hold culture within the region, and that's something that we try to break. But at the end of the day, it's up to the investors to look at other options, because essentially there can be other options that are performing, other securities that are performing just as well or even better. But some of the investors are, like I said, very comfortable and very happy with what they are receiving. But it is something that we have noticed and we're trying to work on with our investors.
Okay, so I received a question here, and I'm going to pose this. I believe this is more for the regulators and the exchange. Due to the number of securities that are listed on the exchange, we see a number of companies throughout the OECS while we walk the streets, and these are companies we patronize. Why aren't these companies listed on the ECSE?
Cedric, I think that question would most appropriately be answered by my colleague from the ECSE.
So the decision to go public, it's a decision that the company has to make based on their needs to raise capital at any point in time. The market is there. The market has been there for 23 years now, and these companies have the option to come to the market to raise capital. But the decision to do so depends on them. And the companies that have come to the market have seen the need to want to raise capital to fund various types of operations that they had over the years. They might see the need or the value in having public shareholders in their company because of their status across the region, whether it's in one country or in multiple countries. And the fact that they operate in the region, they feel the need to open up their shareholding to those customers that they have that can now become shareholders and participate in the profits of these companies that they help generate. Another factor that we hope to see more of in the future in terms of companies coming to the market is that there are a couple of companies across the region that have large public shareholding, but they are not listed. And these companies have the opportunity to come to the market and give their shareholders the opportunity to have their securities listed on a regulated and organized marketplace where these investors can have the market determining the value of their shares instead of them existing in an environment where it's very difficult to determine what their shares are actually worth. Because from time to time we get queries from investors in companies that are not listed on the exchange, and they ask about the value of their shares, they ask about how they can go about buying and selling their securities, and we are not able to provide them with an efficient opportunity to buy and sell their shares, and we also can't provide them with a value of their shares because the security isn't listed on our market. So we hope to see more cases where companies like that bring their securities to the market and provide their shareholders with that opportunity to operate within a regulated and organized marketplace.
And just to add, to help my fellow panelists, I think it goes back again to what we spoke about earlier in terms of changing mindsets. We have a lot of family-owned businesses in the region who have been doing well and are very operating successfully for a number of years. And, these companies or the shareholders just do not wish to dilute their shareholding by offering shares to the public. So I think what we need to do is provide the incentives that would allow them to be able to or to be willing to offer shares to the public. And it reminds me as well, I had a conversation with a small business owner who had those same concerns. One of the things they mentioned is that aspect of control, having control of their company, because it's a lot of people see their businesses as their idea and it belongs to them, and selling shares, they view as giving up control of their entities. And I think as brokers, as participants, or as regulators, as the exchange, we need to assist persons with that mindset in encouraging and educating persons so that they understand that there are ways where they can raise capital, offer shares in a way that would not allow them to lose that level of control or ownership interests, as you may say.
Okay, so while we're on this topic, and that's for both the regulator and the exchange, Mr. Bennett and Ms. Fisher. The question that's posed here is, could it be that the cost of raising capital on the market is too high vis-a-vis raising a bank loan? And hence the reason why individuals and institutions, are moving to going to the banks rather than investing on the exchange.
Yes. That is a very timely and pertinent question. The ECSRC recently engaged in some stakeholder consultations during April and May, and that is one of the concerns that was raised by many of the persons that we spoke to during those consultations. We want to let persons know that we hear and we understand them in that respect. One of the things that our commission has mandated is that the Secretariat undertake some sort of study to determine what the cost of borrowing is as opposed to the cost of raising capital on the ECSM, and to look at the costs from our standpoint, from the regulator's standpoint, and where we can engage in discussions perhaps with the ECSE to see how we can, if we determine that the cost is exorbitant, that we provide that sort of enabling environment that would encourage listings or more listings on the market. So it is, I just wanted to say that it is something that we have identified as a
Okay, so with that, before I move on to the brokers, because we have a number of questions here. I don't think I'll be able to go through all of them, but as you mentioned that, Ms. Faisal, and you mentioned that you are looking into it. You never mentioned what the timelines are for you to get a conclusion on the costing and reducing the cost of the barriers to entry for a company trying to list. You have any idea of these timelines?
Right, so that's an excellent question, and thanks for putting me on the spot, Cedric. We are